All right, traders, it is Saturday, the day after the SPACEX launch, and this is the 5-minute chart. So I want to do two things in this video. I want to go over the pattern analysis, and then I want to go over how we could actually trade this. Those are two separate things. You do not need to know pattern analysis to do trading. I just want to show you, I've done 25 years of pattern analysis, so I just want to show you the structure of the chart, what I think is happening, and then we'll go over in a completely different view of how we could trade this. All right, so the first thing I want to do is break down the strength and the weakness. So this market moved up very strong, moved down very strong, and then moved up again in somewhat weaker fashion. I originally thought that this move up was the end of a leg, and then this entire move down, up, and down was part of one corrective move. I have now changed my thought process because this move down was so significant or was so deep that I don't believe that this was the start of the correction. I think now this entire move here is really all connected into one unit. So that would be a leg of a trade. Now you can see that this essentially subdivides into 3 legs. So this is not an impulsive pattern. You Elliott wave and Neo wave traders or forecasters will understand a 5-wave impulse move. This is not a 5-wave impulse move. So we know that this entire structure is not the trend of an impulse pattern that's going to launch off. This is a corrective pattern. Okay, so I'm going to label this as wave A. Stick with me. I'm just going to do the pattern analysis and then we're going to go over to the trading. So this is leg A. We know that we want the correction to this upward move to be at least as long in time as the correction should be at least as long in time. So did we satisfy that? Yes, we did. So we satisfied that and it kept going. The depth of this is why I chose to move this entire leg to where it is there. All right. So what do I think is happening? Here's what I think is happening. I think we have this as an entire leg. Whether or not it's finished, that's going to be your wave B. And then we will have a follow-on wave C on Monday. So let's look at the progression of wave B. Let's break it down real quick here. We've got a move down. We've got another move up. We've got a move down, strong move down. We've got a bit of a sideways move up and a much longer move down. Now there's 2 things that this could be. This wave, and this wave are your power moves. And if you can see, those 3 are, that would qualify as an expanding triangle. And this is done. Wave B is done, and we're off to the races with wave C on the open on Monday. It is also possible, so that would be considered a triangle. Let me just mark that out real quick, and then you can see what is possible. Let me delete this here. Stick with me. Don't phase out. This is going to be important. So this would be A, small wave A. This is B. This is C. This is D. I'm going to give you one alternative to this, which I think is actually possibly more accurate. And then this would be E. We draw our trend line in a triangle across B and D. So we are looking for a very strong move. My trend lines are always in purple, so let's put that in purple. We are looking for a very strong move to break this trend line like that. If that happens, this move down is over, but we haven't had that yet. So A and C would be like this. Now, there are reasons why I don't believe this is the case. I don't believe this is a triangle. The nature of this is sort of wrong. The extension of E is very rare. This is not what I would consider is what's happening. So here's what I really think is happening. I think that we have an A wave down, a B wave up, a C wave down, and I think this is an X wave. Now this is going to be a new wave A down. I hit the wrong button. This is going to be a new A wave down. We are working on B. We're going to probably get a little small wave C here somewhere. And then you're going to draw your trend line, what we call the 0 to B trend line. So I think the market is probably going to do something like this. It's going to pop, maybe do a little correction, and then you're going to get your follow-on move. That's what I think is really going to happen. Now, why do I think that? There's two reasons why. Number one, this sits better. It fits better in the pattern. The pattern looks better than to draw this as a triangle. We're not violating a bunch of trend lines and things here on the bottom. It just sits better. But the other reason is this. After doing this for 25 years, I can tell you that the time of wave A is often reflected in these long B waves where you count to 3. So here is 1. Here is 2. And it is possible we are done right here. The problem is this is very weak. And this is not the launch of anything. This is not this. Okay? So this has not happened yet. It is possible on candle 1 on Monday that it starts, but I don't think that's what's going to happen. What I think is going to happen is you've got about an hour of time here. This is the 5-minute chart. I think you've got an hour of time here that's going to elapse. And sometimes it happens to the candle where you're going to end up with something like this, and then you're going to get your launch. So this is what I think is happening in from a pattern analysis standpoint of the limited data we have on SPACEX. You've got a nice little channel. When these channels, the first channel here, when it's parallel, you often are followed by an X wave. In fact, it's very common. This is the main reason why I think we have an ABCX, and we have A. We're going to do a B and a C, and then we're going to take off. Now, let's get rid of all of this. That's the pattern analysis view. Oh, let's just do this. Let's just finalize one more thing here of what's possible. This is what's possible in SPACEX. Let's just bring this down. I think it's possible that you get a repeat of A right here. And it could be, and how big is this from a neo wave standpoint? You take A and B, so this would be B down here. You take A and B and divide it by 2. So let's get A and B. A and B. You divide it by 2. Stick with me. I'm going to put it where I think is going to be there. And this is what I would track. If I was a pattern analyst and I wasn't a trader and I was just going off of patterns, this is what I think is going to happen in SPACEX on Monday. So somewhere before the midday, you're going to see SPACEX return to its progression, and your channel is going to look something like this. But understand that the weakness, there's a lot of weakness in here in this pullback. This is a corrective pattern there. So this you had strength, you had a significant pullback. And so this follow-on move should not be very strong. It won't be the strength of an impulse move going vertical. I don't think that's what's going to happen. I think this move is going to struggle while people figure it out. And then at some point, maybe it'll pull back and then it takes off. I'm not quite sure what's going to happen after this, but this is what I think is going to happen. I think you're going to ride this line either to here or maybe 60%. And you're going to go through the middle of this river here. This is the river. You're going to be passing through the middle of this river with strength, more strength, more, not as much strength as wave A. It's going to take a little time. It's going to take a bit. You're basically taking A and B. Oh, this is B, A and B. And you're going to divide the time of A and B, and you divide it by 2 and you get C. So this is what I think is going to happen with SPACEX on Monday. That's from a pattern analyst view. So let's look at how we could trade this. So let's delete all of this completely. And we are going to now look at it from how I teach trading. So I did a full video on this on Friday after the close. I did a full video on this. Let's bring in what I call the trend surfing analogy. This is what I think is happening on as far as trading goes. Now, there are two moving averages, two indicators that you need, and only two that you need to set up this trade. This is let me hide this here. I think I can hide those. No, it's not the one I want. Let me hide these entries. These entries I want to get rid of. So let's hide those. Let's put them in a group and hide those. Give me a second here. Okay, that's what I wanted to do. Now, so what I have here is what I call the coastline. The blue is the 200 period moving average. The orange is the 20 period moving average. I had to fill this in because there was no 20 period moving average in the first 20 candles because it's brand new. This is what I call the wave. This is the deep water. This 200 period moving average is simulated simply because there is no 200 period moving average on a brand new stock. The surfer is the market surfing up this wave, going toward the beach. The beach is where the wave ends. The wave leg of that wave ends, hits the beach, and it returns through a riptide. What is a riptide? This is a riptide. Riptide, the waves come into the beach, they form a channel, they dig a channel out, and all that water goes pushing out like a strong river. So the waves come into the beach and they go back out. That's what a riptide is. So this is what's happening. The wave is coming into the beach, it's turning around, cracking back through the 20, tests the 20, and comes back through. So I did a full video on this. Look at my channel. I just did this video about how you could have gotten these trades going up, and you surf this with stop management. You turn around and you got another trade. So you had two big trades on Monday or Friday that you could have taken. So what is setting up for Monday? Monday, we surf the riptide back to the 200. Sometimes it will cross the 200 and keep going, and it will flip this entire analogy where your beach will be on the other side. All of this will flip upside down, and you will surf this wave as it flips around. This will possibly cross all the way down. Let's make that orange. And your 20 period moving average will cross, and this entire thing will come through and flip. And this will be your beach down here as it comes back through, and your 200 period moving average will come like this, if you're following me on this. So your beach would be down here. You'd be surfing this wave to the beach like this, and you turn around and go back. That's the surfing analogy. Now, what do I think is going to happen? I'm a trader. I'm not a forecaster at this point. So pattern analysis, I'm forecasting, but here I'm trading. So let's look. We want to ask ourselves, where are we in the trend? So this is what I call the trend state. When it's moving off the 200 and it's got an angle, the 20's got an angle, that's what I call the trend state. When it first kicks off, that's the entry zone. That's where we enter the wave. This is where we're popping up on the wave right here. This is where we're popping up on this wave. We sit in the entry zone, we pop up on a wave, and we surf down the face of the wave. So that's this right here. We sit in the entry zone, we pop up on a strong wave, and we surf down the wave until we hit the beach, and then we riptide back. That riptide may end anywhere on or near the 200, and then it's going to either bounce and we do another one where this 20 turns around and gets another angle like this. It's possible this will give us our entry zone, and we'll turn and do this again, and we do this entire thing again. We surf the wave up to the beach, we get out, we riptide back. Now I teach all of this in my course. This is the course, the QR code that takes you to my community. I have a course in there, and I do weekly coaching sessions. I try to be there as much as possible to guide you through this. I teach you candle by candle how to manage this, how to get into the wave, be in the right location, be in the power wave, surf this entire thing through the surfing zone, get out at the beach, and then riptide this thing back. And you do this over and over and over again like a surfer. Paddle back out, surf another wave, have fun, do this over and over and over again. So what do I think is going to happen? I have no idea. I'm a trader. I am not a forecaster. But if this thing goes sideways, and this market does give us an entry signal, and we pop a nice bar off the 200, I'm sorry, off the 20, then I will have an entry signal, and I can do this whole thing again. It is very possible that this will come down here, and we'll go parallel, and maybe this pops right here. Maybe this whole thing collapses and crosses. But if I get my entry signal, what are my entry signals? A large wave that clears this resistance. So I get a wave that clears this resistance. Maybe it's a tail. Let me give you another one. Maybe it's a tail. Looks like this. Has a bit of a tail on it. See if I can get a tail on there. So this needs to be a little wider. So maybe it's a tail. That's a strong, so what is a tail? And I'll finish with this. A tail is a move down. So the market opened here. At some point during the market, it moved down red. Red got taken out by green and closed up here. So this green bar took out a red bar. So a tail, a green tail is an entry. A large bar is an entry. A gap is an entry. So if we have our 20 period moving average down here that goes parallel, that's our entry zone. That is where we're going to get in the trade. That's where we're sitting. We're sitting in the lineup where the waves are. Step one, surf where the waves are, right? So we're looking for a parallel 220 moving average. We're going to look for a power wave. That's one of those candles. And then we're going to surf down the wave. And the whole thing starts again. So we're going to sit here where this thing goes parallel. We're going to surf the wave. Now, if this thing crosses here, we may have an entry. As this whole thing goes south, we may have an entry to take this south, and we can trade this thing going south. But we're traders. We're not forecasters. So I gave you the pattern analysis forecasting view where I think the market's going to move up. And now I'm giving you the trading view. The trading view is we're in a riptide. We're coming back to the 200. We've got a resistance zone here, and we may turn and have an entry, or we may cross this whole thing and the whole beach analogy flips, and we're going to do this whole thing in reverse onto the other side, and we're going to be able to surf that trend going down with our stop management. If you don't know how to do this candle by candle, just hit up this QR code and enter my community, and you can go through the course, learn how to do this candle by candle, and I'll be there teaching and coaching. And let me just finish it up with this final little bit right here. If you are on YouTube looking up all this, you are in education phase of your trading. You need to get into training phase. So the education, you don't want to hop around from guru to guru. You want to get locked into some education. That's what this course is. And you want to get into this course. You want to get your education solid, learn how to do this, get into training, drill on these things until you can teach this course, and then get experience trading your own money, and then you will get the results you are finally looking for. All right, so that's it. That's pattern analysis and trading. You don't need to be a pattern analyst to do this. You simply go candle by candle and figure out what it's doing, where you are. Are you surfing? Are you surfing into the beach? Are you riptiding back to the deep water? Are you sitting in the deep water in the lineup ready to take another wave? Is this ready to go? Boom, you're in the trade. Don't have to ask permission. Just surf another wave. Have fun. So that's it. See you in the community, and I'll catch you in the next video. Take care, everybody.